Doing another voiceover for today's short on NASDAQ. So here using this 3-minute inversion fair value gap, buy side imbalance, sell side inefficiency for my entry to go short. So as you can see, that -3 fib level is the opening range gap standard deviation. And you can see how the bodies are closing beneath that level. I anticipated a reversal at that level. And as price closed below the 3-minute inversion, the annotated buy side imbalance, sell side inefficiency, that's when I entered short. So right away, we're seeing good displacement with the stop loss being placed above the fair value gap candle high. And I'm targeting the equal lows from pre-session. You can see we have a very smooth level there to target. And here I was looking at the 930 opening price, the opening range gap high, and I wanted to see that level be cut through without any resistance. Because if price is weak, it should have no problem getting through that level. And there I trailed a stop just above the fair value gap. Just reducing risk there a bit. And I've sped this up just to keep it concise and short and sweet for you guys to watch. And as price was retracing higher, I was looking on the 5-minute chart, the discount wick of the previous 5-minute candle. And I was trying to see if there would be, I was anticipating a immediate rebalance. So as that candle wicked in there, it fell just short of the previous candle's discount wick on the 5-minute chart. So I'll be marking that here as well in a second. And I wanted to have the ES and the dollar index charts as well simultaneously, just to observe and do some intermarket analysis. That's just to indicate the 5-minute immediate rebalance. You can see how the bodies are respecting that level. On that top right chart, you can see how ES is doing, inversing that buy side imbalance, sell side inefficiency as well, showing weakness there. And the dollar is looking strong with that last candle's displacement, creating a bullish fair value gap there as well. So I was eyeing that on the dollar, and I wanted to see price respect that and stay in the upper half of that inefficiency. If it would ever close that inefficiency and fill that up, I would immediately close the position, because if the dollar is weak, I don't want to be bearish on the indices. All right, so there we have no problem getting through the 930 opening price there, wicking into the upper quadrant. I'm just trying to see how far we can get down there. Good displacement. Getting below consequent encroachment of the opening range gap. Those levels there are the opening range gap once again. So you have the 930 opening price there, which is the high, and you have previous day's settlement price, which is that low. And I'm trying to squeeze as much as I can from this position, so you can see me move my take profit order even lower. Trying to see if price is truly weak, and again keeping an eye on the dollar to see if it continues to show strength. I don't have it annotated, but you can see on the dollar, the bottom right, how it's staying in the upper half of that inefficiency, that bullish fair value gap that it's created, and I want it to continue to show strength from there. And you can see how price wicked into the change in state of delivery. the opening price of that bearish order block. And I was just eyeballing the mean threshold of that bearish order block and seeing how price shows premium sensitivity at that level. Just taking a look at the Dow on the bottom right. It usually just does its own thing. The dirty 30, as many refer to it as. And I've annotated the mean threshold there of that bearish order block. And just taking a look at how the bodies are respecting the upper half and closing just above the opening price of that bearish order block. Now at this point, as it was spending a decent bit of time near that opening price of the bearish order block, I wanted to see a move lower towards that swing low that price has created near the lower quadrant of the opening range gap. You can see how it's trying to get up above into the upper half of the bearish order block again. But that's just the wick. You have to keep in mind the bodies tell the story. So you can't allow yourself to abandon your narrative before the candle's closure. Now this next candle I wanted to see really get lower, get into the opening range gap once again below the 930 open, and work its way into the lower quadrant. Wicking into consequent encroachment there. ES is showing weakness, as you can see on the top left. The dollar is very strong, showing discount sensitivity to that annotated inefficiency. The bodies are not able to get into that lower half on the dollar. So that to me still keeps my bearish narrative intact. Now price is getting towards that lower quadrant. And as long as the dollar was bullish and ES was also supporting the narrative of bearishness, I was not going to abandon my idea here. Trailing my stop just a little bit in profit above that bearish order block. Price is getting below the opening range gap there. And I wanted to see where this candle would close. So it closed just above the the lower quadrant, but it has no problem displacing through on the very next candle. And here I was looking at the dollar returning back into that inefficiency. As long as it was in the upper half and showing discount sensitivity, my narrative is still intact. Trailing stop a little bit there as well. I was looking at that premium wick of that last up close candle and just trying to eyeball the consequent encroachment of that. Price working its way towards that sell side pre-session equal lows. And that purple line that price is approaching, that is a 4-hour buy side imbalance, sell side inefficiency. So I was looking at that. And as you can see on the bottom right, if you pay attention to the dollar, it's getting into the lower half. So I'm looking at that and I'm thinking, okay, the dollar is showing weakness here, while the NASDAQ is also showing weakness along with ES. I don't want to see weakness on the dollar. So here, I wasn't confident at this point that price would reach the terminus target that I currently have set. So I'm really trailing my stop aggressively there, because here it's likely to have a reversal, especially after approaching a higher time frame inefficiency and that sell side pool of liquidity from pre-session. Again, seeing how a dollar is extremely weak, I close my position there. I am happy with what I was able to capture. And that ended up being the low of the session. So I hope that helps you see how doing intermarket analysis can help you with your narrative and building support around your idea and sort of giving you an understanding of how to manage your trade. I hope this was helpful. If it was, please leave a like and comment. Thank you guys for watching, and I'll see you next time.